Good morning and welcome to Trading with Larry. It's Larry alone for the moment. Clint will be joining me in a minute. Eric is away again. Back talking to you guys. 8:30 a.m. I hope everybody's doing well. And the government is shut down, which may be a good thing for the market in the sense that none of these numbers that we're going to print today are printing today. And the big one tomorrow, which the clue is really out because ADP came out this morning looking for a 51,000 job increase, creation increase, payroll increase after having a negative payroll last month. And again, we had a negative 32, which is really kind of weak. We're not going to see, unless a miracle happens today or tomorrow, the jobs number on Friday, which is going to be, I don't know if they're going to leak it. They probably won't. And then what happens, I've lived through these, and people are thinking, hey, this happens all the time, these government shutdowns. But it really doesn't. The last government shutdown was 7 years ago. And it was at the beginning of, I think, Trump's first term. So this is an unusual event. Market, for whatever reason, because of the level of complacency and retail buying, is taking this in stride. Last night, the NASDAQ futures were down 260 points. They're down like 140. So they've recovered half the move this morning. I'm not really sure why. I don't know why they were fearful last night and, new day today and everybody wants to buy. And, looking at, there's Clint. Hey, Clint, how you doing?
There
Good
you go.
morning.
Good. Good to be on.
Good. I just started talking about. I let in a little bit with the ADP number, which was extremely weak, negative again after a negative last month, and the fact that ISM was coming today, and none of these numbers are going to be put out. The jobs number on Friday will not be put out unless they somehow reopen the government, which is not really probable. And I was just starting to talk about, that even though people are like, oh, it's a government shutdown, whatever, it's happened before, and all this stuff, there hasn't been a lot of them, and most of them don't last very long. The last one lasted a long time in 2018 in Trump's first term. Um, we had government, shut down for months, and I just, I don't know. I'd be interested to know your thoughts on, timing on this. How long? Obviously, no one knows how long, but how long it lasts, what kind of lasting impact it may have, and you know, I think Trump is looking at this, and I'll throw it over to you in a second, but I think Trump is looking at this as a way to lean out the government. And I think he's just going to come out today. It may not be today, it may be tomorrow, but come out and just basically axe, half the people that are furloughed. Because the truth is, a lot of those people are hiding in plain sight. They have jobs that they probably shouldn't. The government's paying them, etc. So I don't know if this is like an opportunity for him to get really aggressive. So I was wondering. I'll throw it to you for your thoughts on ADP this morning, and thoughts on the government shutdown, and if there are some areas that may get affected more, or what your thoughts are in general. So I'm interested to hear.
Yeah. Well, so I don't know. First on kind of this threat of furloughs and job cuts. I mean, I wonder. It almost feels like a bargaining chip. We'll see how far he pushes it, but I mean, it's just another threat that he's making to Trump's making to maybe try to gain an upper hand and maybe get this resolved quicker than expected. One thing, just looking back, I mean, I'm glancing over at some data that I've got on the last time, the last 6 times we've had a shutdown. So there's been 6 government shutdowns since 1990. and it's kind of a mixed bag. I mean, on average, the S&P actually gains about 1% from like I think it's the week before to the week after the shutdown. Last time, yeah, it was a pretty extended 135 full days. That's when Trump was in office. Modest gain in the S&P, but when you look at past instances, it's mixed. Like I said, the average is a 1% gain. VIX.
Let me just ask you this. I think like the subscribers and viewers out there, I think, and I am more interested in the original reaction. And I think that that's been negative in general, but I don't know if you have that data, but I do remember that we had a decent sized sell off of the government shutdown with Trump, unless I'm not remembering since I'm old it correctly, but I remember a fairly significant
Yeah,
sell
well,
off of
it's
a bunch
so
of
that
percents.
yeah, that the last one that started on December 22nd of 2018, which that was right near the tail end of a pretty big sell off that we had in the market. I think that one kind of started earlier in that quarter and culminated like right around Christmas Eve.
I remember it well. It was actually a very big sell off, and
Yeah,
then they were worried Santa wasn't showing, and he
that's
came like on Christmas Eve. Whenever.
yeah. Well, here, so okay, so let's go back. Let's go back to that period for a second. So, what caused the market to reverse higher after that sell off? Well, it was when Powell at the time made a dovish pivot. So I think that's where kind of this gets clouded for investors, and where if you want to see the bubble extend, the bubble extends on lower interest rates. Well, you've got the uncertainty over the shutdown. You're going to have missing payrolls data, potentially missing CPI data. So the Feds has to go off of information they already have, or some of these private sector reports that are coming out, like ADP or like ISM. And I mean, look, the ADP figure, that wasn't it didn't look good. I'm looking at odds this morning for rate cut in October, and it's now to 99%. I'm kind of wondering if the market starts to entertain the possibility of a half point cut. If you
I
see,
mean, I don't. I mean, listen, anything is possible. I mean, the stuff that I was seeing out of the Fed heads yesterday, not Powell, but other speakers. Um, Basically they're looking the opposite. I think two were on the tape, Goolsby and a woman, I forgot where she's out of, but they were like, we don't want to move. We're really nervous about the inflation numbers, which we're now not going to see. And like this employment number, the Fed is going to get a look at. I mean, because it's done. Like the number is out. They've compiled it. They don't do it the day before. So, this number is, sitting somewhere. So we'll get a good look at that. But I don't think they're going to get a good look moving forward unless this thing, basically starts to roll again. At any other data moving forward, and that could be for at least a month or two, because people are not working, so there's no one out there gathering the data, etc. So I think the Fed is in a tough spot. And yes, the number today in ADP doesn't look good, but you've seen this in months and months and months and months. The ADP has not matched the payrolls number
yeah,
by the government. So I don't think that the Fed should use ADP, which is a payroll service, to make a Fed decision. So I think there's a little bit more to it. Also, like bonds are up today, but they're not going crazy. The yield's back to 410. It's been, when the Fed met the last time, which was a strange reaction, as you remember, bond yields were at 4%, touching under 4% on the 10 year. And then they cut rates and we went to 4.20 like quickly. So now we're back to 410, middle of the range. Kind of makes sense. You know, and we'll see what happens here, but forget even the government shutdown. It's it's to me, and it was very apparent yesterday. I don't know if you were in front of the screens at the end of the day, um, to see that epic mark job for the end of the quarter where they ran up the stocks and futures, etc., to mark their positions to get paid. It seemed to me like I mean, I've seen it. I've been through, I don't know, I've been through probably 170 quarter ends or 160 quarter ends. Okay. And this was really blatant. And, I received some stats yesterday, from a firm, and retail, there's been 185 trading days. Retail has been net buyers 183 out of 185 days. That means they didn't take profit. Maybe they did 2 days in the whole year. They haven't taken profit at all any day. And that to me is a very scary stat, right? What are they waiting for? Like, the market's come 40+% off the low. It's up double digits for all indexes pretty much for the year, other than the Dow. And there's no fear about really anything. And like, government shutdown. I'm not saying, like you said, it hasn't really been much for the market, but it's not a good thing to have the government shut. Okay, for people out there watching, it's not a good thing. Okay, but that being said, it's irrelevant to the market. That we're in Nasdaq, even including yesterday's low. We weren't even through the low of last night's low, of yesterday's low, which is unbelievable, which is just incredible. So, here we're sitting, new quarter, and I guess same kind of story.
Well, look, everyone's conditioned to buy the dip. I mean, I've seen similar stats on retail. I saw something the other day that was pointing out call option volumes hitting a record high, at least relative to where put option volumes have been at. And I mean, everyone's bullish, everyone's bulled up, and it's been the same story. I mean, it's been the same story since uh, late 2022 when that bear market ended. I mean, everyone's conditioned to buy the dip now. I mean, it just as quickly as downside sets in, it disappears. Everyone's stepping in, and so there's no
But Clint,
there's no fear.
I get it. I'm not disagreeing. What's the dip? A 20 basis point dip? Like buy the dip was invented, okay, for when the market got hit, okay, and then you buy the dip, 5% down, 7% down, 10% down, even into a bear market, buy the dip. There is no dip. There's been one down 1% day. Now, maybe people consider that a dip, but there's been down only 1% day in 5 months.
Yeah,
So, I
this
mean,
is yeah.
that's
I was gonna
amazing. But what I think is actually people are okay. I wouldn't call it by the dip. They're okay buying as long as they're not getting hurt. And the second they get hurt, like when we had that down day where, Palantir went down, all these stocks went down a lot. My phone was blowing up like I was a psychiatrist, and these people are up, so much money, epic money, but they haven't taken one profit, not one profit. So again, I think you got to do that. That's, trading 101. I don't know how this correction, gets moving. I mean, today, listen, it's not good news, okay, but the market doesn't care. So you got to respect it and just let it do what it does. And
here, yeah.
you
So
know, I
here's
thought I thought Nasdaq would minimally be down 1% today, minimally after the run. It's had a 50% run almost off the bottom. You're
yeah.
looking for 1%. That's not a lot, is it? In
If
your
we're
world?
No. And so look, here's what I'm watching, and we're writing up some analysis in the e letter as well around this. But if you're going to see some volatility come in the market, especially as we start October. October is a little notorious for for some events looking back, but two couple things I'm watching. One is the what markets are pricing for rate cuts. Yeah, October may be a lock, but what's interesting is that you look out over the next year, and because of the comments from some of the Fed officials you mentioned earlier, because of comments from Powell himself, where he's talking about there's no risk-free path, and all of a sudden there's a little bit of confusion on if they think labor market or inflation is more important. There's four cuts being priced now over the next year when you look at CME odds. And the 2 year yield, if you look at where the 2 year treasury yield's at, it would tell you markets only expect two cuts in total. So that's one thing. I think investors are starting to come to terms a little bit with that rate outlook. But the other thing I've watched just over the last week or two, Larry, is that the average stock across the market is losing its short term uptrend. So if you look at the percent of stocks, and this is across the major exchanges that are trading above their 20-day moving average, it's only at 43% right now. So just, I mean, think about that. You got Nvidia, hitting new highs. You've got the S&P making new highs, but over 50% of the stocks across the market are in short-term downtrends. They're trading below their 20-day moving average. And a lot of times when you start to see that kind of divergence open up, when you have that much deterioration happening under the hood, when the market's hovering near an all-time high, that can mark at least a near-term peak. Now you've got, which I'm paying attention to that because now you got all these other catalysts coming up. So you've got questions on the rate outlook, government shutdown, October seasonality. So I think that's something worth noting and paying close attention to. That you're not going to hear anyone talking about that.
Well, the reason why, to be honest, is very, very simple. Everybody's in 10 stocks. They don't care about anything else. Honestly, they only care about Nvidia. Like people, the market may have been, had a bad advanced decline line or more, more losers like you're saying, or stocks not holding up, it's irrelevant. Nobody's in those stocks. Like they're part of the index. And what I've noticed, which is really wild, and I think it's it's the Jane Street Cowboys. They're doing things that like I can't even. Again, I don't have full proof or anything, but I'm very aware that these guys net aggregate positions. They know where everybody sits, and it's easy to push up. Like today, you'll look at the Mag 7 and somehow, even in a down tape, there's going to be two of them exploding up. Okay. It'll be Apple today or Tesla or, Nvidia yesterday. It's every single day. Now, let me ask you this. What's the biggest weighting in the Qs, the S&P, and the Nasdaq? It's who it is. It's Nvidia, right?
Mm-hmm.
Nvidia had a monster day yesterday, and I was talking to Thomas, and I'm like, can you believe that the Nasdaq is lower by 100? It was lower by almost 100 points, and Nvidia was up 5. So this is what we have here. We have an algorithmic computer that's going around, and when they're buying something, they're selling something. And then the next day, Apple looked weak yesterday. Today, Apple will be strongest thing on the board, and Nvidia may look weak, or they'll buy Nvidia again and sell Apple. Like I've been doing this a really long time, 40 years. Okay. I've never seen anything like it. I mean, it's just amazing. And then what happens on the opening is they're like, oh, they're buying Amazon today. So then everyone piles into Amazon. So when you're looking at these stocks breaking down or all of these things you're looking at, they're unfortunately, they hopefully will work, but it's kind of meaningless because this has become a full out video game. This is a video game that you could play on your phone all day. And like you said before, call options are, basically at record levels. People are playing zero DTEs. They don't even know anything about, delta, gamma, theta, anything about put call parity pricing. None of that matters. And I've never seen a time where they're so rewarded. It's scary. I mean, it's unbelievable. time and time again. And I mean, I get it because everybody's sitting in the same. So what happens is, in my mind, this is how I envision it. Okay, there's 200 guys in some chat room, and they go and they're like, "Oh, we're gonna buy da 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 da," and then 200 or 400 orders come into the market at one time. What do you think happens? They're not. Back in the day when I was a specialist, they wouldn't be able to move the market. But now they're able to move the market because these big firms like Citadel see the orders coming and they just buy alongside. They don't, they're supposed to provide liquidity, I believe, as a market maker, and they don't. They do the opposite. They provide more illiquidity, and they're doing things out there that are unbelievable for people watching. So like let's say I have a position in Nvidia and I go on my computer and I try to buy it 5 times. They know. They know. They put that into whatever program they have, and they're like, okay, guy in Boca, he's got probably 50,000 shares and he's trying to buy it back or he's trying to sell it out. And they just run in front of you. They don't, back in the day, I could get that order done on the phone with any bank on Wall Street or, a specialist. And the specialist was fine money and had the ability to lose the stocks if they didn't provide really good liquidity. That, for whatever reason, has gone out the window. And that is a lot of the reason why we've had the moves that we've had, especially up, because they know everyone's buying. And then when that turns, there's going to be, what do they call it? A rug, Eric calls it a rug pull. There's going to be like a rug pull
Cool.
of on the market where you're not going to be able to get out. Um,
You actually you have, so I know you recorded something recently. You actually have an event coming up. I think it's on the 7th of this month where you're for S&P Trader, where you're talking about exactly this, right? You're talking about the impact of algorithms on the market. And I know as part of this event we have coming up, we have some special reports coming out alongside of it. And I want to get your take on payment for order flow, because that's part of the write up that we're doing. We're talking about how payment for order flow impacts the market. And I mean, it's just when you start to go under the hood of what payment for order flow really is, and the stuff that they're banning it in Europe next year, right? Like, I mean, this thing is so controversial in terms of how it's giving relatively few firms an upper hand like that. Europe is banning payment for order flow next year.
Listen, I think people out there that are watching that have accounts at Schwab, Fidelity, etc. I'm sure you're aware you're trading for free, but you're not trading for free. Your order is being sold to Citadel, Jane Street, Susquehanna, multiple firms. Now, let me ask you a question. I'm playing poker with you, okay? And I'm playing poker, but I see your cards, okay? How are you losing? Listen, I was at Spear Leads and Kellogg, okay, for 11 years, okay? I never saw a losing month in 11 years, and basically we didn't have the order flow, but we were the specialists, so the order flow went through us. This advantage that these guys have is unbelievable. Listen, in the report, it'll show you like Virtu Financial hasn't had a losing day in years. This is trading. This is supposedly a risk business. You can't. I don't make money every day. No one. I'm sure no one out there does. These firms are stealing money. They're literally running in front of your order. They're pushing. I mean, I don't know if you understand. I'm sure how it works. They're pushing up the market in front of you, either buying in front of you or pushing it up, okay? And then they're whacking you, selling it to you, and then the market falls because there's no order behind it. And yes, you are getting it for free, but your toll is way more than a penny a share or a half a penny a
Yeah,
share.
no one realizes it. No one knows, right?
Well, they do. The government knows, and the SEC knows, and the CFTC knows, and futures, and it's it's just it's the volumes are so astronomical on a daily basis that they don't want to basically take these guys out of what they're doing. And the funniest thing is, firms like these if they didn't have this inherent advantage where they're making money every single day, no matter what, they'd be losing. They would be losing without seeing this flow. So yes, payment for order flow is a very interesting topic. And I recorded this webinar, which I like a lot because it coincides with our spread trading product on the S&P 500, which over the last 5 years hasn't had a losing year. This year's been a little choppy for a number of reasons, but overall. The report and the webinar will explain to you really what's going on inside the market with these firms and how payment for order flow is out there, and how basically they're able to rig the system. And maybe just maybe that's why these markets continue to go up, um, sort of with ease. But when that retail buying turns to retail selling, it's going to exacerbate the move. And it's funny, the S&P is sitting up like, what is it up for the year? Like, trying to see, it's up like 13 for the year. I mean, listen, I minimally think that we could correct half of that or more in the next month or two. I mean, everybody is so bullish and everybody is so complacent. And like they're going to shrug. Listen, they don't even have a down 1% day today, and the government closed, and they, forget even the government closed. They bought the market on the close last night to mark their position viciously. It was a vicious marking. I mean, like it literally was like, hey, we're going to pay any price to buy these securities because we want to pay as high as possible because we're getting paid today off of our assets. So, we'll see. But definitely, it's an interesting webinar. It's a great product, and I think you'll get a lot of insight into, what's going on with these firms, and like you said, this payment for order flow, like why do they have it? Why is it allowed? Why is Charles Schwab telling you you're trading for free? Okay, and they're selling your order flow for 3 times the amount of money they would make in commission, and the other side is making 20 times the amount. So the retail public is getting, as you would say, fleeced with this stuff. I don't know. I remember
It's the
when
invisible rug pull, is what that is.
invisible rug pull, yeah,
Yes.
exactly. But what I would tell you is, I remember back when this first started happening, I was trading at Interactive Brokers, who sells your order flow also. Um, and I told them I didn't want them selling my order flow. See, as a professional trader, you you can actually get paid money in what they call rebates. So if you create liquidity, you get paid as a professional trader for that. And people trade for what is called the rebate. They create liquidity, they try to break even on their positions, and then they get paid a big check at the end of the month, six-figure checks, to create liquidity. But what's happening to the retail investor, and probably the people that are watching our show, is you don't realize that your orders are being sold, okay, and not put in the market in a fair, orderly way. And that's something people should definitely be aware of. And that's very prevalent in the market. But Clint, think about this: these guys know how many orders they're getting a day. So when they see tons of orders coming in Nvidia, what do you have to do? You just have to buy it, right? Because you know that you're going to be selling it all day long, right?
I,
So
I was just trying to pull some stats really quick. Here's one interesting thing. When I was doing some research around this for the report that's going to be coming out, I'm pretty sure I saw, like, back in the early 2000s, Citadel actually wrote up something objecting to payment for order flow because of the conflict of interest that it presents around best execution. But they ended up allowing it anyway, and Citadel jumped into it, and now they're one of the biggest. This says they paid, and this was from April. This says between April and December of last year, Citadel paid 943 million for retail U.S. equity flow. And then if you look at the total space, market makers are paying more than $4.9 billion a year for U.S. equity and options order flow from retail.
And it's only going up because retail is playing the game. But you got to remember, you got to keep retail happy. You got to keep buying because as soon as that doesn't work, and we've seen this before, I've seen this multiple times in my career where retail has, they're not playing to this level. Now it's a video game. Now you're in a literally, this is a video game. It's like this. You watch your screen all day long. I mean, you get a headache from it. Um, the movements are crazy, because every single day is a zero DTE option expiration, right? So they need big movement and they need it now. They're not pricing options correctly, but as you say, it's a multiple billion-dollar business. It's probably a 10 billion or more business. And the unfair thing is, how much retail is getting paid on that? Zero. Retail should be paid to sell their order flow to someone, the way professional traders like myself are. But nobody cares because, listen, if you gave up 20 cents to trade NVIDIA, it doesn't matter as long as it goes up. That 20 cents matters. It's almost the, what do you call it? The casino effect. Your odds, like if you're betting sports, you pay a 10% commission or VIG to the casino. That's what beats you up, right? So here you don't realize that you're giving up a way bigger VIG than 10%, right? And but it doesn't matter because Nvidia is up 5. What do you care that you gave up 30, 40 cents? You made 460. So the game keeps spinning and the game keeps going and the game is going to keep going. And today is a prime example of that. you know I'm sitting here with you on the podcast at 9 o'clock, and it's funny. There's people could watch this in futures. There's every half hour, like every hour on the hour, these algos kick in and they start like buying futures. So like at 9 o'clock they buy, at 10 o'clock they buy, 11 o'clock, at 3 o'clock. It's like it's on the hour. It's like a program. It's unbelievable. But really, you touched on it a lot. It's the amount of payment for these orders. What does that tell you? It tells you they're making hundreds of billions of dollars. they're,
Yeah,
maybe that
if they're shelling out $5 billion every year, then what are they pulling in?
a lot more than 50, a lot more. We have the stats on that. Um, it's a huge industry. But let me ask you this: like, retail right now is it's the whole market. It's everything. It's everything. There's no hedge funds. Back when I had a hedge fund, we were the market. We were big, okay? And the bottom line is now retail has become big ever since GameStop. And listen, net on balance, retail got killed in these stocks. People obviously walked away with fortunes, and remember that. Be careful. Like, Roaring Kitty was out there pumping up the stock and selling it while everyone was buying it. And he made fortunes of money. But what happens when retail gets burned? Which is, listen, it's gonna happen at some point. And retail is listen, as an army, it's very, very fruitful. 50 guys, 200, 300, 500 guys in a chat room, that's fruitful because you're bigger than the market, okay? But when retail starts not to make money, what's going to happen then? Then I mean, listen, this zero DTE stuff. Listen, it's good for me. I like it, but it's a full out mania. I mean, I don't know if you see that, but it's a full out mania, and the thing is, it's a defined outcome that has to happen today. right? So, and the volumes are, you talk about in the billions. If you edit notional values, it's beyond anything I've ever seen. I don't even know where it's coming from. It's pretty amazing. So, you know, we'll have to see. And it's the same thing. Like they just want to buy Nasdaq. I don't know why. I don't get it. But
It's the
you
thing that
know,
keeps going up. It's like you said. I mean, they're drawing them in. I mean, the market makers are making a killing, and so for payment for order flow, and so they need to keep them like the casino operators. They do things to keep people in their seats in the casino. You got to keep them in the casino so you can keep making money off of them.
yeah.
Uh,
I
I
mean,
was
that's
going to ask
right.
you really quick. Just I'm not to jump around, change the subject, but I'm just curious if you see some volatility spill over into some of these other markets that we like to track. Just around government shutdown. Just looking at the dollar tends to pull back a little bit. Yields tend to drop a little bit when you look back historically at past shutdowns. Do we see, like you say, I mean, stocks aren't really doing a whole lot here. Do we see any spillover impact to some of these other markets?
Um, I mean, I don't really know. I mean, I'm not seeing it. I mean, gold to me, I don't. Gold's a funny thing. I was talking to a guy on the phone, and well, this guy just wants to fight with me about the market. But it's funny. I said to him, and even Eric, who's our gold guy, who's not here today, agreed. Like, gold used to trade off of interest rates or dollar movement. Gold doesn't trade off. Like when you're trading gold, like this is what I'm saying. Like, what are they looking at? They're not looking at anything to trade gold. They're just buying gold. That's all they do. It doesn't, like, to me, on a fundamental level. Like, if let's say the dollar is weak, maybe they buy gold, or the dollar's strong. Like there's got to be a mantra here, but this is insatiable appetite to buy the commodity, which is always amazing to me because unfortunately for me, I've traded gold for a very long time. Okay. Originally, when the Hunt brothers were trying to corner the market back in trading places kind of days, in the 80s. And it never did anything for years and years and years. And then, it moved up above 1,000. Then it didn't do anything. And really, if you look at it over time, even with the move in the last 2 years, which is basically 100% move, which is incredible, it's a tough trade. And I don't know. I just think I don't know if it's central banks or it's players in the market. They're just buying, and then just to sidetrack a little. Why? Here's the thing I don't understand. Why do people have to buy? Like, why do they know what selling is? Like, do they have any idea about selling or getting short? Or like, I'm not understanding. Like, why do they? It's almost like on the Robinhood app, you buy something. Literally, it's the craziest thing. I should show it on air. All of a sudden, you buy a stock because I watch my kids. Confetti comes out. Okay. It starts, confetti, and like trading was never like that. Trading was like a real pure thing. And you never wanted to talk about, even if trading is control risk taking, or, we don't use the word gambling. Now they're calling it gambling. Like you can go on IB and bet the mayoral race in New York. You can bet the governorship in this, Polymarket's betting the shutdown. It's all over these sites. Robinhood, you can bet anything. I mean, isn't this a little crazy? I mean, isn't this like it was always taboo growing up? And, to be honest with you, I would tell you, like, when I grew up, the greatest risk to an adolescent was maybe drugs, right? Gambling was never anything. I mean, you couldn't have access to it. Maybe when you got older, you could bet with an illegal bookie, which wasn't legal, whatever it was. Right now, they're putting gambling in the hands of a bunch of 20-year-olds that don't want to work. Like, There he is behind me. And he's, you know, gambling it up on zero DTs. Okay. And he's a product. I love him. And he's, one of a kind. But he's gambling it up on zero DTs. And then his account goes to zero and then he refunds to put more money in. And maybe the story, Clint, here is maybe retail is making money potentially because this is a rip roaring bull market. Um, but maybe really, if we net aggregated all the retail players out there, I'll bet you they're net losers. I'll bet you they're net losers, even in this run. And they're hiding and they've yet to admit it, and they keep refunding their account. Listen, I saw it. You know, I saw it here. I saw it here. Like touchdown T. He's trading, 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 and all he wants to do is trade. You know, and I think it's really almost it's created like a gambling casino. No, I mean, and it's kind of like if you go to a casino and you see the guy in the corner in the cash machine trying to get more cash. I mean, I don't know. Listen, I don't know. I just know that the news in the market and what's going on is definitely not commiserate to the type of move that we've had. And listen, the move is the move, and we're here. But the better question that I'd love to know the answer to is retail really making crazy money? And when I mean that, the smaller guy, like, listen, I have a lot of friends in my community that have done very well. They're all long everything. They don't have one short, they're long everything. They're up a lot of money. They don't want to sell a single share of stock, no matter what anyone tells them. They buy these, like, I don't even know what it is, Spartle AI or whatever. They're buying stock at 3, it goes to 9. I mean, that's one of the greatest trades I would ever have. And they don't want to sell. They said it's going to 20. I mean, literally. I mean, this is what we have. So my better question to you is retail really making that much money?
I think they are. I think they are right now. And look, this is the same. First of all, I agree with you 100%. I mean, like the gambling, risk taking mentality. It's just it's pervasive everywhere. I mean, it's not only in the stock market and what you see in option volumes or zero DTE or any the leverage ETFs that are coming to market. You're seeing it in other places as well, whether it's sports betting apps, Poly Market that lets you bet on, the color of the president's next car or something, whatever the heck it's going to be. You can literally bet on anything now, and I right like this cycle, this cycle is unlike any other, but you've seen it before, and it plays out the same way to where when it is easy to make money, when it feels easy to make money, that's when like it's going to get bad at some point because the internet bubble was probably an extreme example. People have such short memories, but it's just this is like just a much bigger, grander run up than what we had in like 2021. I mean, 2021 was the birth of meme stock mania. I remember 2021. I mean, it was so easy to trade and make money, and you start to see the same types of stocks come around, the same sectors come around. Anytime marijuana stocks get hot now, I'm like, okay, time to be on the lookout for something. And these names they make, they if you want to put a chart pattern over it, I mean, it looks like an Eiffel Tower. Call it the Eiffel Tower pattern. When you see a stock that starts to go up and it looks like the Eiffel Tower, like the other side of the Eiffel Tower is coming back down.
Yeah, but they don't. But what's happened? But I call this a different kind of market to me. I call it. I listen. We can't even handle a 1% correction. If we went down 2% today, this place would be a burning inferno. I'm telling you, Clint, a burning inferno. People would be calling me. They wouldn't know what to do. They're so complacently trained that the market always goes up. And the funny thing is, this training, believe it or not, in April, people were wrecked, dude, wrecked. People were calling me every day. I mean, it was crazy volatility. People were freaking out. What do I do? I'm like, listen, you sat in the stock this long, just, wait it out, whatever. Now they've made back, listen, their stock went from 120 to 70. They didn't sell a thing. Now it's 150 or 160 and they won't sell. So that's the market we're in. And then what's happening also, which I think is important for people to know, okay? Like Nvidia, whatever. It's a great chip company, whatever. It's a $5 trillion stock, which in 2018 there was no $1 trillion stocks. Just picture that. Apple was like the first company, I think, in 2016 to go over a trillion. Okay. Now the companies are 5 trillion, 10, 6 trillion, 3 trillion. And, you add them up, they're, 100 trillion. But you look at like the Buffett indicator or valuation, all this stuff is thrown out of whack. But listen, for what we do for the opportunistic trader is to try to find ways to make money. Again, we haven't really been there in the last 2.5 months. But overall, we're okay on the year. We were having an amazing year up until May or June. We were crushing it. I thought this was going to be the best year for all our products. And I thought we were going to maintain a high volatility that didn't play out. But I can't come on the air here and not expose. And it reminds me a lot of 2007 and 2008 for me, when I had my hedge fund at a very high level. And I had to tell clients that were insane. I mean, they were like, you got to buy this. Everybody's buying that. I'm like, listen, this thing is going to blow. Okay. And it blew. And it actually blew in a way that was crazy. Okay. I think this time, I just, this is what I think. I think people can't handle down not even one day. Not even one day. Like if we had a string, like we had 3 down days last week, believe it or not, Clint, and it barely added up to 1%. I'm just telling you that they can handle. Okay. But they can't handle Palantir going from 178 to 140. Okay. They can't handle it. So what I'm asking you is the retail really, they're strong because they've never been tested. They've never been tested. It's like lifting weight. If you keep lifting the same weight every single day, it's not that hard. But now all of a sudden you go up and the bar crushes you. So again, I just want to remain cautious. Okay. There are opportunities out there. I just think something is going on in the market right now that is outside of us. And, you know, like I was looking at NASDAQ yesterday. The NASDAQ futures were down 80, which isn't a lot, okay, on a $24,000 product. Nvidia was up 5. I was thinking if Nvidia was down 5, maybe this thing would be down 500, but they don't do that. They're going to look on the opening, which is 12 minutes away. So I'm going to throw it to you after this to have you close us out. But they're going to just look for one stock in the Mag 7 to buy. They all can't be down in one day. And I think we discussed a lot of really good things. The payment for order flow, which is people are unaware of that. And that's billions of dollars they're giving up in slippage by selling their order flow. On top of that, the firms that are buying the order flow know what the orders are. How can I lose if we're playing poker and I see your hand? You can't lose. So you got to realize these firms are cheating and they can't lose.
That's why they're paying $5 billion for that advantage.
And why is the government letting this go on? What's the advantage? I don't understand. Why can't I buy that order flow? I think I could do a better job of giving execution. But anyway, we're running late. I want to throw it to you. We're in a government shutdown. Things are down very minimally. It's going to be interesting to see if these guys have the moxie to try to buy it. If not, maybe we get, the beginning of some weakness. Again, it's October. Everyone says seasonality. Everything they said about September and the last week of everything's been wrong. I would say that I've been saying October is always the scariest month to me. So we'll see if we get any type of correction. And I'll throw it to you to close us up.
Yeah, I saw something. October's volatility is about 33% above the average of the other 11 months. So just something to keep in mind. If there's one thing I'm watching right now that no one else that you're not going to hear anywhere in mainstream press, it's some of the deterioration under the hood. Again, there's been a quick drop in the number of stocks trading above their short-term moving average. And when historically, when you've had that alongside the index at record highs, that can be a near term warning, at least a temporary near term top in the market. We'll see if we can get something more than a couple points lower on 3 consecutive days, but that's what I would be watching right here.
Okay. I appreciate it. Thanks for joining me today. I wish everyone luck trading. Just remember, it's October. They marked the market last night up. We're barely down into a government shutdown. And kind of the sad thing in a way is we're not going to get the true numbers for a while, it looks like. Listen, Trump isn't doing any kind of deal till way after Friday. He don't want that unemployment number out. But anyway, I wish everyone luck trading. Enjoy, and thanks for joining me today. Peace.